Life insurance. Yeah, I know it's a topic that can feel, well, pretty complicated, right? But it's also one of the most important things we can do for the people we love. So today, we're going to cut through all the jargon and give you a clear, simple breakdown of what it is, how it works, and why it really, really matters.
Okay, so before we get into any of the nuts and bolts, let's start with the why. And honestly, this quote just says it all. This whole thing isn't really about you. It's about making sure your family is okay. It's about making sure they can pay the mortgage, cover the bills, and keep their dreams on track, even if you're not there to help them.
All right, so what is life insurance, really? Let's get right down to the fundamental concept. At its heart, life insurance is actually a really simple promise. Think of it like a contract. You pay a little bit regularly, those are the premiums, to an insurance company. And in return, they promise to pay out a big tax-free chunk of money, that's the death benefit, to your loved ones if you're no longer around. It's a powerful way to shield your family from a huge financial shock.
So, how does this whole thing work in practice? Well, it's a super simple four-part loop. First, there's you, the policyholder. You're the one who pays the premium to keep the policy going. If you were to pass away while the policy is active, the insurance company pays out that big chunk of money, the death benefit, to your beneficiary, the person you chose to get it. See, it's a really straightforward system designed for one thing: protection.
Okay, so now that you get the basic idea, what are your choices? Let's dig into the two main types you're going to come across. Think of it this way. On one side, you've got term life. This is kind of like renting your protection. It's simple, it's way more affordable, and it covers you for a specific amount of time. Say the 20 or 30 years you're raising your kids and paying down a mortgage. Now, on the other side, you have whole life. This is more like owning your protection. It covers you for your entire life, and it also has the savings component that builds up cash value. But, and this is a big but, that lifetime coverage and the cash value feature mean it's a whole lot more expensive. All right, this brings us to the two big questions I know you're asking. How much coverage do I actually need? And what in the world is this going to cost me? Let's get into the numbers. You'll hear this rule of thumb a lot. A good place to start is to get coverage that's somewhere around 10 to 15 times what you make in a year. So let's say you earn $80,000 a year. You'd be looking for a policy somewhere in the ballpark of $800,000 to $1.2 million. But, a rule of thumb is just that. It's a starting point. To really nail down the right amount for you, you've got to get personal. Take a minute and think about your specific situation. What about your mortgage? Any car loans, student debt? How many years of income would your family really need to stay on their feet and live the life you want for them? And here's the part that honestly blows most people away: the actual cost. I mean, look at this. A healthy 30-year-old can often get $1 million in coverage for, what, $30 to $50 a month? That's like one pizza night for the family. Now, of course, your exact price depends on your age and health, but the big takeaway is this: getting it when you're young is the absolute key to locking in those super low rates for decades. So if it can be that cheap, why do so many people put it off? Well, it usually comes down to a few really common myths, these little mental roadblocks that get in the way. Let's go ahead and bust them, one by one. Okay, here's the biggest one we hear all the time. I'm young, I'm healthy, I don't need it yet. It's so easy to think, yeah, that's something for way, way down the road. But here's the reality check. Being young and healthy is actually the perfect time to get it. Why? Because to an insurance company, you are the lowest risk you'll ever be, and that means you qualify for the best possible rates. It's a huge financial advantage to act now, not a reason to wait. And that leads us right into myth number 2, the idea that it's just way too expensive. A lot of us think of it as this big luxury item that just won't fit in the budget. The truth, and we just saw this on the chart, most people guess the cost is 3, 4, even 5 times higher than it actually is. For real, a meaningful policy can easily cost less than what you pay for all your streaming subscriptions every month. It's so much more affordable than we're led to believe. All right, now for a really sneaky one. Oh, my job gives me coverage, I'm good. It's super tempting to just see that on your benefits package and think, check, done. But here's the critical thing to understand. First, those work policies, they're often pretty small, maybe just 1 or 2 times your salary, nowhere near that 10x rule of thumb. And maybe even more important, that policy isn't really yours. It's not portable. If you change jobs, you lose it. And then you have to go get a new policy when you're older and prices are higher. Okay, so we've covered the basics, we've busted the big myths. What now? How do you actually figure out what's right for you and your family?
It really just starts with asking yourself a few straightforward questions. Who relies on you? For how many years will they need that support? What debts would get left behind? And what kind of future, what kind of life do you want to make sure they have? Your answers to these questions, that's your roadmap. That's what will guide you to the right choice.
You know, in the end, your whole financial plan is only as strong as its foundation. And life insurance, that is the foundation. It's the safety net that protects everything else you're working so hard to build for the future, no matter what happens. So I'll just leave you with this one question. Is your foundation protected?